also because I have.
Good afternoon, everyone. I hope you can all hear me. Good afternoon. Please let me know in the chat box if you can hear me. Good afternoon. Can you hear me? Okay. Good afternoon. Good afternoon, Joseph. Good afternoon, Abdulaziz. Good afternoon, Abisoye. So once again, everyone, welcome to this webinar, an investment where we learn the investment opportunities in the commodities space. Right. Just a bit of housekeeping rules so that we all ensure that we get the maximum out of this event. Ensure that your mic is muted, especially when you're not asking a question or anything. And ensure you also grab a book and pen. Mine is by my side here, so I'm ready to learn. And also, this is a space where we can also network with people. There are people from different spaces in this particular event. So ensure that you get to meet someone today. So yeah, we can move. So briefly, I'm just going to take us through the program for today and introduce our community and of course introduce myself and some of the other people here. The program for today, we're going to have a bit of welcome address, few minutes, very brief, right? Tell us what their community is about and introduce the speaker, the host, and our partner for this event, and keynote speaker, and also presentation by the keynote speaker, Edward Kamara. We get to meet him along the way. He's also one of the speakers. Then we will have like a panel session and a live Q&A session where you can ask your questions live. So yeah, we can move.
All right.
So what's their community about? I think first of all, I would introduce myself. My name is Abisola Adeniji, and I'm the founder of their community. It's an inclusive community where it's an inclusive community of young professionals where we are dedicated towards helping ourselves become the best version of ourselves in our career, personal lives, and even in our finances. So this is, so how do we do this? You know, we have an email community. Yes, we also have like a quarterly event, which this is an offshoot of the quarterly event. Then we also share stories of young professionals on a monthly basis. Then also we share weekly resources on our LinkedIn page for covering different areas for scholarships, opportunities, trainings, events, we share those resources. And finally, we have like an inclusive Telegram community. So yeah, we can move. At this stage, right, I'm going to be handing over to the host, my humble host of this event, Oyekolade Oyediran. Please help me welcome him as I hand over.
Thank you very much, Abisola Adeniji. You are welcome, everybody. Please, you could send a message from where you are joining me. Endurance, you're welcome. Jose Maria, our guest, Mr. Coyote, Mr. Edward, Mr. Baka, Ms. Fumi, Alaoluwa, you're all welcome. So I will just take the objective of why we're having this webinar and this knowledge session this afternoon and this quarter. And from there, we would get to meet our speakers, and from there, we'll hear the voice of our speakers, telling us about the economy, what's in for the commodity markets in this year, the direction, where are we going to. One of the thoughts that sponsored us organizing this program was because we noticed that over the years, we have seen that a lot of people actually have gotten duped, and some of them have lost money trying to invest and plug themselves into the value chain of the commodities market and the agricultural sector in Nigeria. We have seen how the agricultural sector has also grown astronomically, talking about funding, looking at new investments, seeing government policies relating to pushing the goal of agriculture in Nigeria. We've seen also international organizations championing the cause of why agricultural agencies and agricultural practice in every nation should be implemented, because it's an obvious fact that a country cannot grow if its citizens are malnourished, and if they are well fed, the economy will grow. So, pardon me, that's one of the reasons why, and that's the reason why we're organizing this. And we reached out to few guests. We looked at people we had been following and who's their career, what they are doing now in the agri space, in the finance space. Personally, for me and some of my friends on the team here, we have followed Coyote Moshen's profile for a long while. He did a webinar session last year, which was insightful. We have also seen how Tribe Agric has grown over the years, getting funding, deploying innovative technology to help the cause of farmers and agriculture. Apex, we have also seen Apex on the other hand, also making agricultural investments seamless and making it also interesting and attractive to young professionals. So when we considered all of this, we thought in ourselves that we have to do this, and we took the cause to say that we are taking it to inform the public, educate the public about agriculture, about the financial outlook of 2023, what the agricultural sector poses, its potentials, the risks, harnessing the value chain, and looking at 2023 generally. We also saw global shocks in many other countries, which everybody or some people here are aware that it has caused food scarcity, or it might cause food scarcity. So how do we plan? How do we make a good return of investment in year 2023? How do we eat good balanced diet and, increase our productivity levels in our careers? And that's why we sought to host this program this afternoon. So you are all welcome. I welcome you once again. You're all welcome. I welcome you once again, and I will just take the profile of Coyote Motion. Coyote Motion is an astute entrepreneur. He loves his, he's interested in viable businesses and across agriculture, transportation, infrastructure, waste management, fintech, and the hospitality sector. He has previous experience in asset and resource management, where he led investment banking division to raise a capital in excess of $4 billion for corporate projects and subnationals. He also managed over 500 billion naira of AUM with the largest non-financial institution in Nigeria. He's also a mentor of the Tony Elumelu Entrepreneurship Program. Ladies and gentlemen, I present to you Coyote Moshebi, our keynote speaker, who will be giving us a presentation into the economic outlook of year 2023 and its direction. The next voice you will hear is Coyote Moshebi. Thank you very much.
Hello, good afternoon. I don't know if everyone can hear me.
Yes, we can.
Okay, I want to share my screen. And thanks for joining me this call. And also thanks for the invite. I mean, I'm honored to be part of this. I'll just take a minute to share my screen and just continue. Everyone can see my screen.
Yes, we can.
Yes, we can see your screen.
Okay, all right then. So not to waste time, what I have here is bullet points of just the key issues around where we see the economy and how it dovetails into the commodities markets. And then just starting from the global side. These, for me, are the key issues in terms of the global economy and what impacts on Nigeria for the year. So first off, you have the tensions in Russia and Ukraine. Obviously, we've come out of the shocks. It's still elongated. I mean, it's still happening. But the shocks to commodity markets, the tension it has caused, we think is more subdued compared to where we're coming from. So what that generally means is that prices for commodities, energy prices will still remain high. But obviously the scale of increase, as what we've seen from last year, will not be there. So, I mean, we experienced diesel go from 200 to 800 naira per liter. We experienced crude oil price go from about $45 to 100 and something dollar per barrel. We think it will stay at that level. We don't see further growth in terms of the prices for commodities. The key issue really is China, and when you come to COVID and supply chain dynamics, there's been a little bit of increase in COVID cases in China, and that's impacted on supply chain. So if you speak to key importers in Nigeria today, they will tell you about certain delays in bringing goods from China. What that does really is that's likely to slow down the pace of recovery in the global economy. I mean, we come from COVID, we've come from Russia tensions, and then everyone is expecting that the global economy is likely to recover. However, the pace of recovery, we think, is going to be impacted by the supply chain constraints that we're having from China. So how soon that is going to be reduced would impact on the recovery. But when you come to the monetary side, I mean, because of what we've experienced in terms of price of commodity generally, we're still going to see inflation across most economy. And the impact of that is that the monetary policy from the US Federal Bank, US Fed, the Bank of England, and most of the monetary policies are likely to increase rates as a way to tackle inflation, even though their own government is still going to continue to sort of support consumption. And so we think that that's in itself will drive the outlook for interest rates. So in terms of impact, commodity prices are going to remain high. For interest rates is going to be high across most emerging markets. Now, the impact of that is that the US dollar, the United States dollar, will be stronger, and we're going to see currency shocks across emerging markets. Reason being that when you have the US interest rate go up, a lot of investors looking at the risk in emerging markets, African markets, are likely to go to the US. So, and that's already existing, because what you see today is that there's been a lot of downgrade in terms of African bonds. Ghana, for example, has defaulted on its euro bonds. They've sort of started to do a bit of restructuring, and that alone has impacted on the yield level. And so not all investors will pursue IE. Some will actually go back to risk-free assets. And that's what you have with the United States dollar being a very strong currency across most currencies in the last 1 year. Now, the impact in Nigeria, I mean, we're not speaking so much around election, but it's just to say, I mean, looking at all the survey polls you've seen from Stairs to Bloomberg, it just shows that, I mean, the leading candidate today will be Peter Obi. But then when you look at these surveys are quite digital and sort of aligned more to the digital inclined population. So it's not really where we think the decider will be. There's still going to be a lot of shockers to see. The APC candidate seems to have quite a bit of an advantage in the grassroots. and really speaks to the governors, which he has on the side. I mean, you have over about 18 governors backing you, which means that, I mean, one governor alone is about 30 commissioners, about maybe 100 or something local government chairmen, about 100 or 200 or something local government councillors. So that alone brings the grassroots advantage. But the predicting factor in the election will be the North, because it's quite undecided if they will be sticking to agreements or moving to the South, or still vote on the basis of tribe, right? And that will decide on where the election will be. But regardless of who wins, what we think will happen is that the next 4 years will be better than what we've had currently. So whoever wins would sort of deliver a better outcome. And that's not to sort of remove the impact of this current administration, because some of the benefits we'll be expecting to materialize in the next 4 years will come from what this administration has done from infrastructure. So you have the rail lines, you have the roads across the southeast, the north. You have the refinery that's been supported by the administration. You have the multi-rice mill that has just started, which a lot of supply chain will be plugging into that rice mill. And you also have like the Ajakuta steel mill and quite a bit of that. And so that alone will sort of impact on the economy in the next 4 years. And then with the fact that the key problems in Nigeria in terms of the shocks are already there. And so no matter who comes, no matter what your policy is, you would be forced to react and fix these issues because they are now in the front burner. Now, the only issue is that the pace of benefits would now determine on how the incoming president would react or treat these things. And there are key issues that whoever wins will have to face. And these are the issues that will drive the pace of the economy over the next 4 years. The first is subsidy and deregulation. I mean, everyone is complaining about the impact on revenue. The government is spending about 3 to 4 trillion subsidizing fuel price, and they have to take the hit. Today, we've seen prices go up, but it's not deregulated because it's still fixed. And what you want is a case where market forces determine the price of petrol. Today, the sector is also not efficient because from a fuel importer side, you only have one buyer. And from a fuel marketer side, you only have one seller, which is the NNPC, quote unquote, who is sort of stabilizing the market. So that's not an efficient market. And regulating that sector is also key to the efficiency of the refinery that we are seeing at the point when they start to refine petrol. So we think that no matter who comes in, they would have to take the toll. How would they do the subsidy? Would they reduce it? Would they sort of manage it and ensure that it goes to the people that need it the most, or will they cut it off and then support those sectors? I mean, we've seen countries who have done it that way, where they take out subsidy and then pump the money into the vulnerable, those that actually need the subsidy. So we think one of those two is going to happen in the next four coming years by whoever becomes the president. The second issue is the debt levels. Everyone has complained about how the federal government has borrowed excessively. You already have a high deficit. They borrowed, even the window, the ways and means that come from the CBN has been shut up by above 100 or something %. And so the question then will be, how will they sustain their budget? Because if you look at the policy framework for each of the candidates, it speaks to higher deficit because they have to spend their way out of these issues. So for us, what we think will happen is, I mean, they will still have to borrow. They just might be then differentiated approach to borrowing. So what you might see is either project funding, there might be a lot of privatizations that might happen to support that debt levels. But the impact is that the government will still have to borrow, and that alone would impact on the interest rate environment, because if the government is borrowing at elevated levels, then the economy and businesses will have to borrow across that. And you can see that in the last 1 year, the monetary policy rate has been increased by about 3 times, and that impact alone has forced a lot of banks to increase their interest rates to the economy. And so when you now add that pressure to the fact that the government will be borrowing excessively, and so the treasury bill rate, bonds rates are likely to go slightly higher, that will impact on the interest rate environment. Now, revenue will be a key problem, and one of the ways to solve the revenue is the removal of subsidy, because that saves the government at least a bit of revenues. But the key concern would be the fact that we're likely to see a whole lot of taxations from whoever wins, looking at their precedents and also looking at their policy framework. The focus would be to increase taxes, either bring more people into the tax net or increase taxes to certain sectors that they feel they're not getting enough from. And so we expect that to happen over the next 4 years. Exchange rates will be sort of devalued from the official rate. The good thing is the black market is already at high levels. It has tested at 800. We don't think in the next 1 year exchange rate will move beyond 800. So what is going to happen is sort of moving the official rate close to where the parallel market rate is for the next 1 year. So we're likely to see the official rate going somewhere around 600 to 700 in the next couple of months after when the new government takes power. For the power sector, we think that there will be quite a bit of liberalization, taking out the impact of the TCN. So what will happen is that maybe a GENCO can sell directly to a consumer or a disco, and that alone drives efficiency in the sector, and there'll be higher tariffs over time. For security, the three main candidates are more better when it comes to negotiations, bargaining, and discussions, and that's very key to reducing insecurity in the country. And we just think that the higher the negotiation power, particularly if the two ruling party, candidate for ruling party becomes the next president, which they've shown that they have good negotiation tactics, that alone we think will reduce insecurity. If you look at insecurity in the last 4 years, there's a little bit of negotiation. Look at taking out the amnesty program alone, brought back the militants who blew up pipelines, and then we went back into problems on Marcos. And then when you look at the way they treated the old IPOP case, so a lot can be solved with better negotiation, and just what we're going to be expecting from whoever becomes the candidate. Now, what does all this mean for key factors is that energy cost is going to be higher. We're likely to see increase in fuel price, and diesel price will remain elevated, and a lot of power tariffs has also increased. And so the impact is that food prices, commodity prices, transport prices would sort of go up. And so we're likely to see more inflation pressure. However, because of the high scale we're coming from last year, we have a very high base. Year-on-year inflation might not be as high as we expect. So the focus for anybody to look at inflation figures is to focus on the month-on-month pressures from food and non-food inflation. Interest rate environment will go up. The MPC would sort of use the MPR as a way to curb the interest rates, inflation. And then you also will expect that the cardinal effect of the government borrowings will drive interest rate environments this in the next couple of months. Now, the problem with demonetization is that, we're going to see the benefits, but in the short term, it's going to impact on economic growth. This is the case. What happened in Nigeria today is also similar to what happened in India in 2017, 2018, where they also did the same thing by changing currencies. You will see slower growth, especially from sectors that are very characterized by informal and cash-based transactions. So today, if you ask anybody going on the road, they will tell you that there are problems with transportation. They can't get cash to take transport. So that transport sector, in the next couple of quarters, you would see that pressure there. Real estate will be another sector because sort of thrives from a lot of cash transactions. And so you will see that slow growth. But after that, the sector will pick up. But the impact will be on the financial services. If you speak to a whole lot of fintech businesses now, payment transactions, digital transactions has increased by about 100%, if not more than that. And so the banking system liquidity has increased. Today, you have system liquidity that has gone up. They've been able to acquire about 4 trillion naira into the system. And so that liquidity impact alone supports the banking sector and the financial sector as a whole over the next couple of years. Now, what's the positive for Nigeria despite this risk? Like I said before, the financial sector will be a key beneficiary of where we are going to, with a deregulated sector, with higher prices, with more liquidity to play in the banks, and with a high interest rate environment. The banking sector will be a key gainer over the next couple of years. One positive for Nigeria is that we're a very consumption-driven economy. If you look at data over the last couple of years, Lagos State alone will consume average of 1 trillion naira eating food out of their house. You have cost of entertainment drinks going to hundreds and hundreds of billions. And when you look at it from the entire Nigeria, we have a very strong consumption. And so that alone keeps the economy going, keeps the consumer sector itself going, and also supports the agricultural and commodity sector. The only concern then will be for the consumer who is consuming, what will be the impact on prices and how much will they consume. So that's a positive for Nigeria. Then you also have human exports. Diaspora will always support the Nigerian economy. You have 40 billion coming in every year, and we have more people going. There's still going to be more money coming into the space. There's also content, music, movies, and that supports the human export. So those alone brings in more revenues into the economy. And then ICT programmers working for big companies outside, that alone supports the economy. So these are where the positives are. Informal sector is the fact that with what's happened with the cashless environment now, a lot of players who are trying to formalize the informal sector are the ones that will be a very key beneficiary of the economy over the next couple of years. For the agricultural sector, like I said, what we support the agricultural sector in the next couple of years, consumption one, like I said, we have a very high consumption rate. Then the government will still continue to support export policy on non-oil, and that would still support the sector. And there's supply deficits. The fact that a lot of things with demand there cannot be met by local demand. And so that alone will still drive prices and keep the players off to the game. Now, the challenges and who are going to be the key beneficiaries for the sector. So you have supply chain issues, size, value chain integration, and cash flows. And that's are the key issues that will determine those that would benefit from the sector. So the enablers are going to be a key beneficiary. When I mean enablers, I mean you have farmers, you have the end user, and whoever is sort of enabling the flow of the commodity from the farm or from anywhere to the end users benefits. And these are talking about transportation, logistics, aggregators, processors, and off-takers generally. They will be a key beneficiary for the sector. You also have integration, people who currently play in that space and are also looking to integrate, either investing, partnering, or collaborating with logistics players, aggregators, and processors will be a very key player or key beneficiary of the opportunity in that sector. And then anyone who's also trying to formalize the informal subsectors in the agri space will be a key beneficiary. And these are where I think the opportunity in the agricultural sector are today. So that's it for my presentation on the outlook, and I will leave it if there are questions or further clarifications of what I've said. Thank you so much.
Thank you so much, Mr. Coyote. Thank you so much. What an insightful session. You have taken us through what the economic outlook will be in 1 year, and I'm looking forward to other speakers speaking extensively on this. For me, I would also want to know more about the aggregators, the off-takers, processors, logistics, and formal processes, because as you all know, our focus is also streamlined to the agricultural sector. The opportunity we can tap into the value chain, and hence we have market practitioners in this field on board today to be able to also enlighten us and lead us further in this discussion. Also, you made mention of foreign to the country through diaspora funding and through FDIs. We have our next speaker is Edward Kamara. He's a dynamic leader and utilizes technology to solve societal, and he's the CEO of 6996 Technologies, where they've succeeded in building the first truly open financial structure that promotes safe and informed access to financial produce. Edward is going to be speaking to what Coyote has earlier said, and he's going to tell us how we can find and we can link, bridge the gap between the agricultural sector, the end user, and the farmer, and also to give young professionals and the general public more investable options in the society through agriculture. So the next voice you hear is Edward Kamara. Thank you, Mr. Coyote, and please make welcome Edward Kamara, CEO, 699 Technologies.
Okay, good morning or good afternoon, depending on where you are. I'm very glad to be the next speaker on this program. And I think that Coyote said a lot of what I had to say. But for my presentation, I will be speaking on how technology enhances investments and promotes financial inclusion, primarily focusing on the agricultural value chain. So we'll just take a little bit of an overview across the value chain and see how investments and financial inclusion play within the value chain. So I'd like to share my screen if that's possible.
That's possible.
Okay. All right. Thank you. Okay. So first of all, we have to understand that when it comes to hello. Okay. So for my presentation, I'll be touching on financial inclusion and investments and how we can use technology to bridge the gaps between investments and financial inclusion. I'll be speaking a little bit on investments and also technology. So to begin, basically financial inclusion has to do with the ability for you to access financial services. Now, we have to understand that there are different infrastructural gaps that limit the ability for somebody to access any form of financial service. So you could look at Nigeria has one of the largest unbanked populations for an African country, even though we continue to make strides in attempting to use digital technology to reduce the unbanked population. We still have a lot of people that, because of infrastructural deficits, they cannot access financial services. We have information gaps that do not allow people to access financial services. So financial inclusion has to do with how do we bring everybody to, let me say, the market to be able to access financial services. So basically, that's what financial inclusion has to talk about. Now, we have to talk about what are the gaps between investments and financial inclusion. As I just said, infrastructural deficit is one of the primary drivers of low financial inclusion. Now, we also have to consider the fact that we also have a low literacy rate within our countries. Across Africa, that is a pertinent problem. Now, if people are uneducated, you cannot expect them to also understand financial information. So we also have a low financial literacy problem. But that is exacerbated by the fact that even the financial service providers do not like to provide enough information. They do not want you to know the intricacies of whatever financial product you're actually purchasing. Now, that's why, let me just get back to what they were saying about Ghana and the government defaulting on its payments. There was not enough information with regards to the bond buyers in terms of retail. Individuals that purchased the bonds did not understand clearly the extent to which government could decide on a particular day that, okay, I'm not going to pay you. I'm going to defer your payment for the next 5 years. If you understood that clearly, that would make you what? Make an informed decision. So we have generally low financial literacy, and that's the problem that does not promote investments. Now, again, what is the impact? If we do not have people that understand or that have access to financial services, that means that businesses are not able to grow because they cannot access loans. Once they cannot access loans, they cannot expand their businesses. They cannot sell more. They cannot order more. So the lack of financial inclusion has, let me say, a drawback effect on the ability of an economy to grow. The more people you have saving, the more money the banks or the financial institutions have to lend. And once they have to lend, you can assume that, Satiritis parables that everything would grow. Now, the power of technology. I don't think that this is necessary because I'm sitting in a very far away land and I'm talking to very, very brilliant people. So, I mean, we all understand the power of technology, but technology has done a lot within the last 20 years, or even some would say 30 years. It has bridged a lot of gaps within society. And we are only getting to the point where it becomes even more revolutionary. And I'm saying this because of technologies like blockchain and Web3. They are improving every aspect of society. You could even talk about ChatGPT. I mean, it's improving almost everything. At least it's providing a foundation for you to learn something. That's how I see ChatGPT personally. I find it as a foundation for you to build on. It doesn't replace, it only provides you with context and yes, and allows you to shoot for the stars. So basically for us, technology is trying to improve the financial sector. You know, now we have mobile banking, we have the emergence of fintechs. Nigeria is a hotbed for anything technology. So we have all the fintechs, we have all the prop techs, we have all the ag techs. I mean, we have everybody, you know. So technology is really, really opening up the space for development, you know. And why is this? Because again, when we are talking about financial inclusion, technology is supposed to be the driver of that. Mobile technology, the fact that somebody can put a telephone mast in a jungle and people within that area who do not have access to electricity can actually put on their phone and connect to that mast and have service. That is technology. Now, that is why mobile banking is very popular in countries like Ghana, because at the end of the day, it gives them some level of financial inclusion. They can save their money on their phone. They can go to the vendor. They can withdraw it. In Nigeria, the government has done very well. I would always say this, no matter how much we can hate the government or the system, Nigeria is the only country in West Africa that has a same-day ACH. The automated clearinghouse in Nigeria is instant. There's no other African country in West Africa that does that. That is supposed to promote financial inclusion. Okay, so I mean, technology has the ability to improve processes, and it is slowly gaining the ability of enhancing financial inclusion in remote areas. I could bet some people don't have bank accounts, but they could easily download, let me say, PiggyVest, Cowrywise, whatever fintech app it is, and then have access to some savings product, you know, because at the end of the day, technology is supposed to make life easier. So technology is definitely improving processes. Now with Bitcoin or blockchain technology, I mean, it makes transactions even faster. Okay, when we come to technology, we'll talk about, I mean, agriculture and how it influences agriculture and stuff like that. But generally, technology is enhancing financial inclusion all across Africa. So again, in Nigeria, you know, CBN's cashless policy, you know, we all know the effect of that, you know, of how we have to queue just to get money, you know, just to get 20,000 naira, you know. So again, that's a strategy for them to promote you to use what? Your ATM card, or for you to do a transfer, because they have tried to make the entire system through the automated clearinghouse seamless, you know. Now, now you have a lot of cross-border payments that are using blockchain and whatnot, you know. Again, that is supposed to improve the money transfer, make it instant, make it secured, but also make it anonymous, you know. So again, as I said, once you have enhanced technology within processes, you can be assured that things are going to move a little bit quicker because there's more security and there's more transparency. Okay, businesses, people are able to now save money into the bank all right? Small businesses that are engaged in, let me say, processing. For example, I have a piggery, and I'm interested in actually let me say, selling my pigs or my pork meat, to the closest market. I can now go for a bank loan in order to buy maybe a tricycle or a small refrigerated truck, to be able to transport my goods. With technology, I can actually now measure, okay, fine, it's going to cost me this to transport the pigs from here to here. This is the cost per mile. I mean, you can do so many things. So once technology comes into it, it does not just improve access to finance, but it improves access to operations. And that's something that is very important if you want to grow an economy. Your ability to improve operations and reduce costs, but maximize profits. Yeah. So again, for me, I want to focus on what we're talking about. I didn't think I was going to be the second speaker. I thought I was going to be the last. But technology, to me, I want us to understand that technology doesn't focus on, when you talk about investments, technology is not limited to the retail. You have to look at technology from these five core actors in the agricultural value chain. You have the farmers, you have the aggregators, you have off-takers, you have marketers, you have transporters. You have to understand that technology acts in almost every single person's field of work. So when you come to the farmer, again, are you going to invest in the farmer? If you're investing in the farmer, then that's where you have people like Thrive Agri, who are actually investing into the farming part of the value chain. Okay. Now, as a retail investor, are you going to invest in a company like Thrive Agri to boost farming productivity? Because once the farmer can produce more, he can earn more. Once the farmer uses precision technology, it could be seed placements, it could be drone pesticide and weedicide spraying, it could be data analytics from the farm. All those applications of technology at the farmer level actually do help improve the farming processes. And that is where we need to understand that we need to actually invest a lot more of resources into. So if you are an investor and you're looking at, okay, how do I invest into agriculture? All right. How do I promote investments? You should look at companies that are actually using technology to improve the processes within the agricultural value chain. You would realize that in 2020, there were a lot of agriculture investment platforms. Okay. I think 2019 and 2020. But throughout the past 2 years, you see that a lot of them have folded up. And most of them have folded up because they did not rely on technology. They were focusing on the money. And if you do not rely on technology to actually guide your operations, then you end up chasing the money to repay the next investor. So I want to encourage everyone that technology has a critical part to play in our overall development, especially in our ability to bridge investing and financial inclusion. If we can educate enough people and bring enough financial products to the agricultural value chain, we can be sure that the overall process is going to improve, and we are going to have better results when we decide to actually invest in agricultural activities. So yes, I'll be done for my presentation. Any questions? I'm happy to take it. And yeah, cheers.
Thank you very much, sir. Please. Thank you very much, Edward. An insightful presentation. Thank you for your exposition in this area we've seen, and that's why we're also happy that we have market practitioners. And one recurring word that's been coming from our speakers is the cashless policy. And they are into the agri space, and with the new cashless policy, not being able to deposit it with the bank. So once more, also I would like to say you can send in your questions. We're going to be having a question and answer session, and it will be good that you send your question and so that we can pick and could select it and pass it on to the speakers to treat it, because 2023 is still a good year to deliver your good return on investment, especially with the potentials in the agri sector and the commodities market. And so we'll be taking our next speaker, and I'm going to be reading thank you very much. And he is an agri-businessman, is into agri-business and supply chain. He works as the head of value-added services for Thrive Agric, where they leverage on technology to provide sustainable product for farmers across Africa. He and his team serve as an enabler. We've heard Coyote talk about enablers. Edward Kamara also spoke about enablers, marketers, aggregators. These are the market practitioners, and they use technology to bring the end user to the direct farmer. They bridge the gap in distribution of commodity goods. So the next voice you'll be hearing is Obaka Ikani from Thrive Agric. Please make welcome Obaka Ikani from Thrive Agric. Thank you very much.
Thank you very much, Kolade. Sincerely glad to be here on this platform, listening to great minds. Already, this is making my day already. Thank you very much, Kamara, for that insightful presentation. There's a whole lot you've spoken about.
But your issue is not on.
Oh, sorry, apologies. Okay.
Thank you.
Yeah. So there's a whole lot you've been able to talk about around financial inclusion, and then how it's important for individuals, companies to leverage on the vast opportunities, and then also on the challenges that you also outlined, how we can leverage on it and then make agribusiness to the next level in this country and also in Africa. So I'll just briefly talk about our work, what we do at Thrive, and then what we've been able to achieve, the kind and amount of technologies we've put on ground. And then basically, we discovered three major issues around smallholder farmers, which is access to market, access to finance, and access to extension-driven advisory and premium markets. So what we were able to do was to provide a technology, a platform that through which these farmers can get finance. So we have this agricultural operating system called AOS, which we built in order to give us access to enable us to gather accurate data from these farmers to better service them. So this app is able to do some sort of data capture bio data, geographic data, economic and social data. We're able to pull all of that, get their credit history and all. So with this particular suite, we're able to get data, real-time data, accurate data of these farmers. And then for us doing this over 3 to 4, 5 years, there are a whole lot of partners because of the reliability of our data. We've been able to work with the likes of CBN, USAID, and a whole lot of other partners to ensure that farmers get the best, farmers get access to finance, farmers are included, and farmers have that financial inclusion all around about them. One thing we've been able to do, there's also another technology called T-Money. On that T-Money platform, we get agents to take POS devices to rural environments to where these farmers are. And then with these POS devices, these farmers that are unbankable become banked because we give them debit cards. So most of our farmers that we work with have debit cards. Most of our farmers have debit cards. They have access to getting cash within and around their environment. Yes, we understand the current cash situation in the country, but we hope that once things get better in a sense, because it was kind of a challenge during the last season when we're trying to recover our loans from the farmers, getting the old cash versus the new cash and all of that. But we're able to weather the storm, and then bulk of our receivables, up to 80%, we've done that, or recovery rather. So on the commodity trading end, one of the things we've been able to do strongly is also to introduce another technology, another application called Trader. On that Trader app, commodity aggregators, agents, farmers are able to plug in to sell or buy commodities, even marketers. You're able to buy commodities, you're able to sell commodities, whether inputs during planting season or during harvest. You're able to also aggregate and sell commodities on those platforms. So I think in the panel session, I'll be able to answer questions that speak directly to the entire chain of commodity trading, be it from sourcing, price intelligence, gathering, sourcing, off-takers, and also the dealings, how to engage off-takers, how to get off-takers to buy your commodities and all of that, spot trading, contract trading, and all of that. I hope to discuss all of that in the panel session and the Q&A session. Thank you very much.
Thank you very much, Mr. Obaka. Thank you once again to our speakers, Edward, Kamara, Coyote, Omoshebi, and also our speaker that is yet to speak from AFEX. We're going to be moving over to the panel, and we're going to be taking questions now. We believe that it will be more interactive and insightful if we can speak to the questions that we already have, and speakers have alluded our minds to say that, okay, in the course of 2023, Coyote has mentioned that we'll see interest rates still, we'll see the NPR figure and inflation figure rising up. And Edward Kamara has also spoken about the use of technology, how it affects the system and the market and the government generally. We have market practitioners in our midst, Tribe Agric, which we've heard, Obaka Ikani, and also Oluwafunto from AFEX. So I'm just going to read her bio. She will be coming in the panel session. So we'll be taking the panel session with Obakai Kani and Ms. Funto. We'll take her profile now, then we'll move on to the panel session. So Olua Funto of Financial Market at AFEX. She leads the engagement with capital market operators and financial institutions to unlock funding for a portfolio product backed by commodity as an alternative asset class for investors. She was involved in the raising of capital of over R1 billion in funds to provide for 25,000 smallholder farmers in the 2020 planting season. Gentlemen, please make welcome Oluwafunto Olasemo. Thank you very much. And we'll move to the panel session.
Oh, okay, sorry. I thought I was supposed to say something before the panel session. Okay,
yes,
hi.
Please.
Good afternoon, everyone.
Good afternoon.
So thank you for having me. It's been an interesting conversation so far. I love technology, but sometimes technology have their own minds. So I'm unable to put on my camera for whatever reason. So please indulge me. Secondly, I think I need to query someone because they sent an old profile. So in terms of the impact of what we've done within the market, so that 1 billion is supposed to be 100 billion naira. And that 25,000 farmers is supposed to be about 400,000 farmers. So just a very quick intro into who we are at AFEX and what we do. So AFEX, we started out in 2014. The initial idea was to have a commodities exchange where you can provide market access to stakeholders within the value chain. But again, when we started out, the reality of Nigeria hit us because when we talk of an exchange, particularly commodities exchange, right, you would then realize that there has to be some framework that needed to be in place. A lot has been said around technology, very little about infrastructure, as well as standardization. So understanding the reality that a lot of this framework we're missing within the Nigerian context of having a viable commodities exchange then led us into a journey of how do we solve for the entire value chain. The answer to that question for us meant that we needed to have entities that would specifically address the challenges of this value chain. So our play within the value chain is essentially across storage, where we have a company that does direct backward integrations with farmers to provide access to financing, storage facility, and also able to make commodity available to the processors. The entire mission behind that is to create an inclusive and sustainable food system for Africa. We do deeply believe that Africa has the ability not just to feed itself, but to feed the entire world. So again, that became a very critical value chain that we needed to play in. And the second also was then facilitating the flow of capital into the value chain across the continent. So we have a finance house that pretty much raises working capital from the capital markets by offering innovative products that are backed by commodities. And these funds are then used to either finance the processors or the producers of this commodity. And of course, the exchange sits at the center of all of this. Again, just as I mentioned, are licensed by the Securities and Exchange Commission, is at the same level of what you have on your equity side, your NGX or FMDQ, where it allows issuance of instruments. The difference between us and them is the underlying asset that is being traded on our platform. In terms of the customers we service the processors, who are the ultimate off-takers of the produce. So a processor can come to our platform and issue a forward contract, for instance, and an aggregator can match that forward contract. So a processor doesn't need to leave the comfort of their home to fulfill their procurement need for their production. We also have, of course, the producer. They are at the center of the entire value chain. Without the producers, we wouldn't even be talking about commodities or a commodities exchange. Our play within that place is to ensure that there is shared prosperity for the producers by providing a platform where there's price discovery, so they're able to get a fair value for their produce. Of course, we have the investors that provide the capital, either in form of a fixed income, or they can play as speculators and hedge their portfolios and get better return on investments. As we are all aware, there is a strong correlation between the prices of commodities and foreign exchange. So the joke we say is, if you can't hold commodity investments, because you will literally have a one-to-one return, and you're better off than having an 100% Naira portfolio. A lot has been said around technology, but I would rephrase it to say that when you look at the agricultural value chain, technology is a subset of what needs to be done. There's an entire array of infrastructure that needs to be put in place. If you're not aware, a lot of the farming that happen in Nigeria and Africa by large are done by smallholder farmers. Yeah. By definition, a smallholder farmer is someone that cultivates less than 10 hectares. So about 90% of the produce in the country are done by 80% smallholder farmers. And that is actually counterintuitive for a country that have about 74 million hectares of farmland. Half of that is what is being cultivated, and just 2% of what is cultivated is being irrigated. So that would then begin to let you know where the gaps are and how you can begin to benefit from the value chain. So rather than saying technology as a gap within the agri value chain or within the commodity value chain, I would rather put it as infrastructure gap and within the value chain, because there is then how do we produce all year round instead of producing only during raining season, because we have very limited irrigation system. The fallout of not having an irrigation system meant that our production would always be less than our consumption. So if you look at the average growth rate in the production of commodities or agri-commodities in Nigeria, year on year, it is about 1.8, less than 2% approximately. But when you then compare that to the rate of population growth that is growing at about 2% and above, it's no brainer that we will never be able to produce enough to feed ourselves if we do not fix an infrastructure gap such as irrigation. Even if it is just moving irrigation from 2% to 10%, it is going to make a whole world of difference. And ultimately, the economy is going to benefit from it. And which is why for us as FX Commodities Exchange, how do we structure innovative products that unlock capital from the capital market? And then that capital is then used to finance the value chain. The total size of the pension fund as it stands about 13 trillion naira, but none of the pension fund is being channeled into either financing working capital for the value chain or infrastructure. There has to be a way, we have to be able to crack the code that then offer innovative structures or products that PFAs can conveniently and comfortably invest in. Imagine just 10% of 13 trillion coming into the value chain. Imagine the world of difference it would do to the likes of Triva Greek or any value chain player for that matter. So at AFEX Commodities Exchange, we offer commodity-linked products such as asset-backed commercial paper that enable processors to be able to unlock working capital, either short-term working capital or long-term working capital. So if Triva Greek, for instance, potentially say need 20 billion naira as working capital for the next season, this asset-backed commercial paper can potentially be leveraged on working with capital market operators to unlock such volume for them. On one hand, it allows processors and aggregators be able to access cheaper cost of funding. On the other hand, it also allows investors who are looking at diversifying their portfolio to be able to take part in the upside of the prices of commodity. We then have other instruments like the trade finance note, behaved similarly to the asset-backed commercial paper, but strictly tailored towards financing exports. For those that are very familiar with variable income instrument like you have on the Nigerian Stock Exchange, our products such as the sports contract or the ETC can allow you comfortably buy securitized contracts at one price and exit at another price. So the simple way I like to put it is that the way you would talk to your stockbroker today and buy stock of GT or stock of Mobile or stock of Nestle, you can come on the AFEX Commodities Exchange, talk to your brokers and buy unitized contracts of maize as low as 200 naira. And then monitor the fluctuation in prices, of course, understanding the dynamics of how the physical market works. And then exit your position when you feel you've achieved your desired return. So that's kind of a summary. So I don't stretch out what we do. I'm sure that in the course of question and answer, we'll be able to speak more to the questions and how we can all benefit from the opportunities that abide within the commodities value chain. Thank you.
Thank you very much. It's an insightful session. We're going to move on to the panel discussion and we'll be taking questions. Please, if you have questions, reach out, send them on the chat page so that admin will pick them up and we'll be able to ask our speakers here to enlighten us more on the topical questions which you need to be treated. For me, I'm going to be starting the panel session, and I just want to ask, where do a young professional like me and people like myself fall into in the whole agri ecosystem as at now, and how can I plug myself into the value chain? So, can you hear me?
Yes, we can, but I'm not sure if that's an open-ended question to all the panelists or
it's
directing
not
that question.
It's to you, madam. It's to you, madam. Yes.
Okay, again, as I have explained, there are different opportunities within the value chain, and depending on who you are as an individual and what you're hoping to get out of it. So, and I'll try and take the different profile of potentially young people who are looking at taking up opportunities within the value chain. So if, for instance, you are in the either producing, aggregating, or value chain, I would say that yes, there are opportunities for aggregation, but the challenge is where young professionals or young professionals face usually is that do they have enough capacity to deliver volume for big tickets, right? A lot of times they don't. Apart from the fact that they don't have the capacity, there's also how do they have access to some of the LPOs, let me say, for instance, so let's imagine in Nigerian breweries, for instance, consuming commodities worth of 200 billion naira on the average in a year. How can young professionals benefit from that? So on our platform at AFEX, again, it's a commodities exchange. And as you know, commodities exchange, we typically have different boards. So there's a board we call the DAWA board. What the DAWA board does, or let me put it this way, we have 3 boards. So we have the OTC board. What the OTC board does, it's largely for big ticket buyers and big ticket sellers. And because it is an exchange licensed by SEC, price discovery will naturally happen. So you will typically have big buyers put up orders in thousands of metric tons, and then potential aggregators who have the capacity to fill that would then take up the order, fulfill it, and the settlement happens on the exchange. However, for young professionals, we have what we call the DAWA board. What the DAWA board does is it is also an OTC board, but it allows for small players to be able to fulfill the procurement need of small buyers, like small poultry farmers that need maybe 5 metric tons, 10 metric tons, right? So they would typically go, so the poultry farmer, for instance, would typically go there and put up their orders at a buy price. And a young professional can then take up that opportunity and fulfill that opportunity on the DAWA board. So that's speaking to the physical side of the commodities. On the financial side, there's the opportunity to diversify your portfolio if you have a good understanding of capital markets. So essentially, the way you would analyze your equity or stock market by looking at the fundamentals, either the technical or the analytical side. You could also study the fundamentals of the underlyings in the commodity markets, looking at price, looking at demand supply dynamics, looking at other informations around weather, forex, and international news, to then become an active investment trader on the platform, where you buy contract at X amount and then exit such at another amount and make your spread. There's also opportunity to also then offer your services as advisory by working with a licensed stockbroker, where you then have your community you provide in financial advisory to, and then you're putting up your trade on the exchange through the broker, essentially.
All right, thank you, madam. Thank you, madam. Well treated. Thank you, madam. I will take in this other question, and this is for Coyote. It says, what are the optics of the commodities markets in year 2023 vis-a-vis other investments, as you mentioned, the bonds, the euro bonds, the mutual funds, ETFs, backed up by gold that we have recently launched, green bonds. What are the optics in the commodity market vis-a-vis this investment? Thank you very much.
All right, the commodities markets, I mean, like what the last speaker had said, it's going to be more attractive from a yield and return perspective to these other markets. Reason being that it's really about your reference point. I mean, those other markets will sort of go in line with what the treasury bill yields are and what those other rates are. But the commodities market is the real market fundamentals that you see. The returns are quite attractive. Obviously, it comes with the risk. And with some of the solutions provided by FX, Trival, Greek, and other players, there are quite a bit of ways to mitigate that risk. You can decide to be an investor or be a player in the market by either partnering with somebody or creating a business or investing directly either through instruments with what you see from FX and other players. Yeah. But I think it's more attractive, and the dynamics and fundamentals of the economy today sort of supports that industry or that sector in the next couple of years, which sort of makes it more attractive compared to some other sectors or places that you can see.
I'm sorry, if I could just lend my voice to that?
Sure. Yes.
So before we look at the optics of what the commodities market is in 2023, I think it's safe to look at what are the activities that happened in 2022. The first speaker spoke about the Ukraine war. That war made everyone realize that about 15% of the total world calories are being supplied by Russia and Ukraine. So what that then meant is that there was a high cost of what's the input vis-a-vis fertilizer and energy, and the cost of some commodities like wheat. So because there is high cost of input, what that meant is that for the farmers that cultivated last year, particularly those that choose input for increase in yield, it meant that their cost of production was going to go up. So the translatory effect is that when they are now selling the commodity this year, the producers who are the ultimate off-takers of these commodities will be paying a premium for most of those commodities. So the translatory effect is that for your producers of cornflakes, drinks, and the rest of them, their cost of production is going to go up significantly. Also bearing in mind that the cost of commodity makes up about 80% of their production costs. Then by the time you factor other costs of production like energy, cost of resources and everything, you realize that their cost significantly increases. The flip side is their profitability reduces. So for entities that are then listed on the stock exchange, like your Nestle and the rest of them, ultimately their overall performance in the market would reduce. So they may not be able to return as high return as they would have typically done if all of these factors I talked about were normal. So what that then implies is that the return on stock is going to be bearish, meaning it's going to not to be so attractive. The flip side is that when prices of stocks are going down, prices of commodities are going up. And of course, we also see that in food inflation and the rest of them. So 2023 is going to be an interesting year. For one, we will still continue to see sustained high prices of commodities in the market. So if you are paying for high cost of commodities by buying your food expensive, then it makes very simple logic sense that you should be able to recoup back your money by investing in commodity-linked instruments that are offered by genuine platforms. One more last thing is that as an exchange, because again, we sit on data and we also have our own price index, the way you have your all-share index on NGX. So we did a 5-year comparison of some commodities. We did the index return. And over a period of 5 years, the commodities market returned 33% average, while the stock market returned about 5%. So again, for me, it's data speaks more volume than all the English we can all care to speak about. So look at what happened last year, what's going to be the impact on the cost of production for the producers, what's going to be the impact on their P/E ratio. Would they be able to declare more dividend, or would they be able to declare more profitability? And then take a decision as to whether you should be in the commodities market or you should be in the traditional investment market. Thank you.
All right, thank you for that insightful, if I would say, revelation on historicals of how the commodities market outperformed the stock market. I also want to direct this question to you and Coyote. Then I will be taking it. How do we hedge our portfolio in the market now, looking at the risks associated with the commodities market and generally 2023 as a very interesting year that you've said? How do we hedge our products, and what advisory would you offer to products or options that people can pick and how they can go about it? Thank you very much. So we'll take thank you.
Okay. So the question is, how do you hedge your risk,
also
right?
please want to implore our speakers to, yes.
So the question is, how do you hedge your risk, or how do you hedge your portfolio, right?
You hedge your portfolio looking at the risks associated with the market.
Okay. So again, I'm going to answer this question purely from an exchange, a commodities exchange perspective. I had mentioned earlier about our product on the exchange, where one is structured in such a way that it gives you all the benefits of a fixed income. Take, for instance, if you invest in the trade finance note or the asset-backed commercial paper, the return is fixed, the tenor is fixed. It is a secured senior CP. So you're literally risk-free if you invest in such. I also then talked about the variable income, where you buy at a price and exit at another price. My advice always is to have a blend of the two. So again, depending on your risk profile, if you have very large appetite for risk, you can then be heavy on the variable income instrument, and low on the fixed income instrument. Or you could just go all bullish by taking the variable income instrument. If you are very conservative, you want to be heavy on the fixed income commodity linked instruments, and so that you don't totally lose out on the upside of commodity prices, you also want to take a little bit of position on the variable income instrument. So that will kind of give you above the traditional markets return on investment. But again, we have brokers that are members of the FX Commodities Exchange, brokers like FBN Quest Securities, Marble Capital, United Capital Securities. You can talk to them and they will give you more insight into how to hedge your portfolio in the commodities market. We have weekly newsletters that goes out telling you all the price movements. You can plug into Channels Television every Wednesday by 10:20 a.m. on the business news to also get more insights on performance of the market and where you should be positioning yourself.
Thank you very much. So we'll take Harry, then we'll take questions from the audience. We'll cut.
Okay, I will just share, my experience in the agri space were two sides. I wanted to build, from our business, we started by wanting to build a portfolio of business in the agri space, and then also having the liquid investments, just like the CPs. So on that side, I understood clearly that I'm as a young professional then, I did not have the skill to be on the ground. So what do we do differently? We partnered, we looked for guys who were very operational in the agri space, who understood the technical. already had their own small size business, invested in them. And when I say invested, at that point in time when we started, it was very small, really from 2 million to 5 million, invested in them. And then we were bringing in the extra resources, debt financing, corporate governance, and all that to build the business. So they were on the ground and we were at the back end, sort of providing the support. And we've been able to grow that business. I mean, we started with a farm, maize farm, castor and veggies. And today we have one of the biggest storage and processing company in Oyo State, in Ani Trading. And so that's how we were able to do that. So we found the right partners, really, because it's something that you need guys that are on ground. And so you need to just find the right partners from character, from vision, and to all that stuff. So if you're looking to build a business there, that would be one approach to go about it. And on the other side, in investing in agribusiness, how do we hedge our risk? We just ensure that we can see our money end to end. That's the key risk. And these are the areas like what the other speaker in FX, Funjo, has spoken about, is that when you look at the instruments that they have created, they've been able to see the money end to end. I mean, why will I want to invest in a farm if I cannot see where the products are going to be going to the end user? There's a lot from the end. See, when you go into agriculture, you're facing input risk. Where do you get your seed from? What kind of soil are you planting? Now you finish planting and you harvest. You start to face storage risk. With the commodity spoil, will you transport it to the warehouse or to the storage center? You get to the storage center, you're facing risk again. How do I process and keep it at a good condition to the off-taker? Then you start to look at who's the off-taker, who's going to buy it, at what price is it going to buy it. So if I cannot see my risk end to end, I would not necessarily go into that project. And sometimes it requires that if I'm doing large scale, I will bring in the actors, or we will bring in the actors to ensure that we can see end to end. So if I want to fund an aggregator, I might bring in an off-taker that will buy from the aggregator. So I know that if I give you the money, I can see where my money is going to. I can see where you are giving it to. I want to bring in a transporter who will transport that commodity from the aggregator all the way. So every bit of the value chain is already being integrated into my investment. Without that won't happen. And that's one of the key challenges with financing in agriculture, the fact that you cannot see the money end to end. Why do I want to give a farmer? So if you look at sectors that have done better, let me give you a perfect example, would be off-grid energy sector. Projects that have gone better in that space, where they've been bonds, they've been able to unlock values and billions of transactions. All the actors that play to deliver that energy to the consumer are in that transaction. You either will see the gas supplier, you see the generation company, you see disco. And so with instruments from FX, you can see that that's already been done. They've been able to sort of integrate every actor in that space. So to hedge your risk, in summary, just ensure that you can see the flow of money from where it's being deployed up to the end user who pays for the eventual commodity. And then you sort of mitigated your risk in agriculture. Thank you.
Yeah, so I would like to add a little bit to that. And I agree 100% with Coyote, because if you are going to invest in agriculture, because of the high risk nature of it, it's always important for you to have a full understanding and be able to track, let me say, your money from A to Z, because you don't want a situation whereby you've invested into the farming process, but then there's no off-taker. You are not sure of the off-taker of the produce. So it's important for you to, when it comes to agriculture, it's important for you to understand the entire value chain and be able to track. And that's why I think technology is very, very important. For example, with blockchain, with blockchain technology, you're actually able to track out, for example, if it's, let me say, if you invested into, let's say, a particular batch of, let me say, maize, okay? You are actually able to track that batch all through the process. all through, let me say, if it's cultivation, if it's processing, if it's whatnot, if it's transportation, if it's final sale. And that's what technology is supposed to do. Technology is supposed to be able to provide you with the final information that gives you that security of your investment. So, I mean, I agree that technology has to play a part in every single point of the value chain. And as an investor, you must understand that you need to use technology and data. Primarily, it's about data to be able to invest wisely in agriculture.
All right, thank
Hey,
you very much.
can I say something before we move away from that question? I kind of get a bit not excited when I hear people say agriculture is risky. I always say that it is a perceived risk. Agriculture is not riskier than the oil and gas sector. And I'll tell you why. I had mentioned earlier that most of the agricultural activities are done by smallholder farmers, right?
Yes.
So it means that even if you finance 500,000 farmers and there's any risk materializing, the percentage of your loss will be localized. Because for you to, so even if you're doing 500,000 farmers and 10% default, for instance, the maximum that most of them would typically produce would be between 4 to 5 hectares. So 50,000 times 4 to 5 hectares. Your loss can be well managed. But imagine a bank financing a oil well project and they don't get to eat oil. The loss on that project can wipe out not just one bank, several banks. So tell me which one is riskier? So my take and my challenge to the banks and the people within the financial sector is that we should stop focusing only on areas where the government is the biggest spender. The reason why we have lots of investment into the oil and gas is because there's a lot of government attention on oil and gas. The amount of default and bad loan in that sector is mind-blowing. But when you now compare, so again, look, if you look at that analogy and then draw parallel with the agricultural sector, you would realize that it is all perceived risk. Look at the last 24 months when the government or CBN started doing active participation in agriculture. We now started seeing banks having a big desk and giving facilities. So banks and financial institutions should wear their innovative cap, wear their thinking cap, stop that narrative that agriculture is risky. It is a perceived risk. Every sector has its risk. How do you identify those risks? How do you mitigate? And then how do you put structures around it? It's what should be the core of the conversation, not that agriculture is risky and so we won't touch it. Oil and gas is far more risky than that.
Okay, so let me just jump in a little bit. So again, I think that the problem or the issue with agriculture, because it's not a problem, it's a solution that is being built, is the lack of formalized data. That's the issue that is being addressed with agriculture. For the fact that it has for a long time been informal, and we have not been able to have structured and, let me say, verified data. That is why it was perceived, again, I will use the word was perceived to be risky. But I would also say that financial players take, let me say, interest in more structured agricultural activities. For example, AFEX has benefited from, I'm very sure, some investments from financial firms. The reason for that is because you probably had data to show. The issue with the smallholder farmer is that they did not have data to show, in the past. But as technology improves and farmers get more knowledge, farmers get introduced into the financial system, or generally any form of enhancement system, then the agricultural sector becomes attractive to, let me say, risk-averse individuals who prefer, oh, I need to have all this data. I cannot take this decision if I don't have this data. So to me, I think it's an issue that is being solved. And that's why organizations like Thrive Agric and AFEX are helping solve that problem. They're helping bring smallholder farmers to the forefront, and they are providing them not just resources, but they are also providing them the necessary support to become mainstream or to become formalized. So yes.
We can go on and have an entire day on this conversation.
All right,
I'll say
you.
that data is a problem in Nigeria.
Yeah.
And agriculture is not any different. If they tell you we produce 2 million barrels of oil, do you have a way of verifying that? We don't have data across all sectors. So back in the old days, we had a cocoa board that there was price discovery and all of those, but we discovered oil, we abandoned it. We had the granite pyramid, we had the granite board. So that was extremely structured and formalized. It's just, we just need to change our way of looking at things and be ready to do the data work. Nobody's going to gather the data for us.
That's the truth. I think I agree with Oluwafunto. There, Thrive Agric as a case study, we were able to get this data for government, for private sector, right? The reason why we got funding through Sterling Bank from CBN was because we had data and it was verifiable. So we can actually go on and on. The thing is, the bottom line is data and technology. We must be able to have that as key stakeholders in the sector, right? And then position ourselves much more appropriately, the extent where we can be able to say, okay, we have this data, this is the opportunity, this is how you can plug in, this is what you can do with these farmers. A whole lot of stakeholders or investors are currently knocking on our doors to ride on that platform, on that structure. There are some persons that are interested in selling low energy to farmers, what's it called, solar power energy and all of that to our farmers, because they understand that these farmers can be traceable. We have the data and all of that. So it's key. I think we are less risky in the ecosystem of business in Nigeria and other sectors.
All right, thank you very much. This is a question to Obaka. AFEX has enlightened us that they are an exchange. So someone is asking, just sending the message that what does Thrive Agric do differently from AFEX, and how can we plug or himself plug or tap into the value chain of what Thrive Agric is doing?
Oh, thank you very much. So at the moment, we're working with smallholder farmers across Nigeria and across over 18 states in the country. First of all is we're providing these farmers access to finance, access to premium market, and also access to extension-driven advisory. So in a sense, at the moment, for every portfolio, for every thematic area, or for every focus we have on these smallholder farmers, area of focus we have on these smallholder farmers, what we're able to do is ensure that, number one, if it's production, these farmers are able to make 3x to 4x, right? Because they have access to good information. They are able to get financing on time, and not just anyhow kind of financing, cheap, affordable financing that is also effective for them and their production. So at the moment, yes, depending on where you are as an individual, you can either connect with us via as a broker, a commodity broker in the space. If you're interested in the commodities we're also interested in, like maize, rice, soybean, sorghum, ginger, cocoa, cashew. And then also we currently we launched our export activities last year. We also got presence in about 4 African countries: Ghana, Zambia, Kenya, and Tanzania. So in these countries also we are deploying our 2 main technologies. One that we launched last year, we did a test run, and we are going to fully launch this year, which is Trader. It connects, it connects farmers, brokers, aggregators, marketers for inputs and commodities, and then also the AOS technology, which we basically use to collect data and then help support farmers with financing. Over. Hi, Kolade.
Oh, can you hear me now?
Yes.
Oh, thank you so much. Thank you so much. It's been an insightful session. If I'm going to ask the speakers and our listeners here, I don't know whose responsibility it is to get data. I have seen from the discussion so far, and one of the reasons for organizing this knowledge session is that there is a huge gap in the data that is supplied about the agricultural sector, and it has given it these perceived risks and the perception it has in today's market. So I don't know, maybe we'll look for someone or an agency that will take up this task in harmonizing all the data in the sector. Thank you so much once again. It's already 1:42, and I know if there's any other question, please kindly reach out to me now so that we could ask our speakers. Thank you, Coyote, our keynote speaker. Thank you, Edward Kamara. Thank you, Obaka Ikami, and thank you to Oluwafunto. Want to wish you well. Want to say thank you for coming and giving us these insightful lessons. And I believe that for all those who listened, you've gained 1 or 2, and you just need to follow up on what it is. Apex is a commodity exchange, Tribe Gig, helping advisory and reaching smallholders, farmers. Edward Kamara spoke about technology and harnessing the potentials in any sector, and Coyote gave us a wonderful insight to what the macroeconomy is saying for 2023. It's my pleasure to host you this afternoon. Thank you so much and have a wonderful day. Thank you, everyone. Thank you.
Thank you for having us.
Thank you.
Yes.
Thank you. Thank you so